So I'd like to talk about Bitcoin Treasury companies, and I wanted to lay out, the basic principles. There's a lot of ignorant antagonists in the world, and they're like all snivelly, like, why would you want to buy a Bitcoin Treasury company when you could buy the Bitcoin? And you hear that a lot. I mean, we're the first year. In my opinion, this is the first year in the launch of this business. If you got in more than 12 months ago, you were sort of ahead of ground zero. I would say the business really legitimized, took off November 5th, 2024. That's the point when you had the red sweep. That's the point when Bitcoin went from 60,000 to 95,000. Very quickly, what we saw was 12 cabinet members flipped pro-Bitcoin. The president flipped pro-Bitcoin. The Secretary of Treasury flipped pro-Bitcoin. And guidance from the SEC, the CFTC, the OCC, the FDIC, even the Federal Reserve and the Treasury, all flipped to unequivocally pro-Bitcoin. If you look at crypto policies with the mega banks, the too big to fail banks, Bank of America, Citigroup, Wells Fargo, et cetera, they were constructed over the previous 4 years. In that environment, after the execution of Signature Bank and Silvergate, both of those were healthy banks that were destroyed by the previous administration due to their involvement in crypto. I think most large systemically important banks, most banks in general, adopted a policy out of an abundance of caution, and the result of those policies was so vague, it kind of meant that everyone in the industry was unbanked, you couldn't get credit, and those policies still remain, by the way. You could post $10 billion of collateral to those banks, you can't get a nickel loan today. Okay, so that's not because of government guidance. The government guidance is exactly the opposite over and over and over again. But the banking system of the Western world is uncramping itself, and it'll probably take 4 years for that to happen. And during that time frame, we're just in this epic of institutional adoption. You've got the right accounting, you've got the right guidance, you've got the right law, you've got the right tone at the top. And that just means large, risk-averse, bureaucratic organizations are going to take their time to work through it. But it's not like every single week I don't have a conversation with the president or the CEO of a bank or some other large financial organization where I point out that they're about to miss out on trillions of dollars of opportunities. And this is why the private bank, the commercial bank, the investment bank should get involved. If you have I couldn't have those conversations 4 years ago. Now we're going to have those conversations every day for the next 4 years. We're going to convince 10%, 20%. And so we're in this transition. I think there's two massive forces in the world today. There's digital intelligence, there's digital assets. And if you look at financial institutions around the world, what's amusing to me is you've got financial institutions that embrace digital intelligence, like my company. I sit down on a Saturday afternoon, I play with the AI, I design a security, I redesign the security, I design the security for the third time. The AI says it's never been done in the history of the world. I send it to the lawyers, they say it's never been done in the history of the world. I send it to the bankers, they say it's never been done in the history of the world. And then they come up with one little quibbling concern like, there might be a fast pay issue and it's unsolvable. And then after 2-3 weeks of tradition, I go back to my AI and I say, is there a solution to the fast pay issue? And it says, yeah, make the liquidation preference floating. Okay, where's the floating liquidation preference come from in our prefs? It's because there's a fast pay issue in the prefs and you can't sell them above par without that floating liquidation preference. I could hire 10,000 lawyers and wait 10,000 years. I wouldn't get the answer. I got the answer in a few minutes from the AI because the AI has no prejudice, it has no inertia. Okay, that's a finance company that uses digital intelligence. What happens next is we print $6 billion of those. What happens without AI? We sell zero. Everyone says, well, what's the killer use case of AI? Well, maybe design a security and sell billions of dollars a month of it. That might, how many people do that? One. I'm sitting at a table with a lawyer that works for a mega multi-trillion-dollar financial organization. I said, you know, do you use AI? No, our legal department won't let us use AI for security concerns. They don't want us to put confidential information into the AI. Okay. You literally have a set of megacorps that won't use digital intelligence for security concerns, and they basically make everybody that works for the company slow and stupid. And then you have another set of companies that use AI, and those people are smart and fast. Now, if you take digital assets, it's the same thing. Those, you know, a different set of banks, you know, they're like, well, we don't touch digital assets, you know, because the government, because something happened 4 years ago. Well, they're, you know, what I would say is poor and weak. And if you embrace digital assets, you become wealthy and powerful. And so, by the way, I can show you finance organizations that embrace digital assets, reject AI. I can show you ones that claim they use AI, but they really reject it. They just tell themselves they use it, and maybe they do or do not embrace digital. But, you know, I think the opportunity for Bitcoin Treasury companies, what are they? You know, they're digital companies using digital capital, hopefully using digital intelligence to create digital securities, digital equities, digital credit instruments to sell into the digital economy. Nothing that we've done would have worked without digital capital. Bitcoin is digital capital. And most of our more compelling ideas came from digital intelligence because no one ever did that before. You know, like when we designed our prefs, we set them as par value 100, made them perpetual. No one ever does that. You can find 5,000 examples in the modern world where people don't do it. They normally make retail prefs $25 or they make institutional prefs $1,000. Okay, it turns out if you go back and read the history of the Rothschilds and the history of money, the British government in the 1780s did it. The British government issued consols. They were perpetual bonds, par value 100 pounds, yielding 3 or 5% that floated above or below par. And I look, you know, backed by gold. We created something, 100 par value, perpetual, backed by digital gold. Okay, and so what happened in the middle? For 100 years, the world went backwards. And now we rederive these elegant instruments that, by the way, every French, Austrian, British, Spanish, Italian central banker, they used the same instruments 300 years ago. In fact, the entire world ran on gold-backed credit for 300 years or more. That was the currency system of the world until 1971, with varying degrees of collateralization. So we're in year one of reinventing the finance system, issuing digital securities and digital credit on digital capital, and we can do it into digital channels. And right now, they're digital channels like the NASDAQ or other standard securities markets, but in time, they'll be the crypto ecosystem, 24/7, 365, tokenized, self-custodied. You know, your securities will be self-custodied, your credit instruments will be self-custodied. They'll all trade everywhere in the world at the speed of light. Now, let me talk a little bit about, you know, treasury theory. Bitcoin Treasury Company, what's revolutionary? Well, Bitcoin, digital gold. We all acknowledge digital gold. Okay, digital gold, digital capital, better than gold, right? Capital, economic wealth that lasts forever. You buy 1/21 millionth of all the money in the world forever, right? That's the idea of digital capital. You know, that's a powerful idea. Pure economic energy. Outperforms the cost of capital because it's pure economic energy. When's the last time the human race agreed on something that was pure economic energy? Well, it was gold for 5,000 years. And now we're starting to re-agree. You know, 5% of the world is starting to re-agree that we've got a new form of capital. Instead of metallic capital, which is what gold was, we've now got digital capital. If you've got a digital capital asset that outperforms the S&P, right, you can capitalize a public company on it. That means you become positively polarized to capital. That means that the more securities you sell, the more shareholder value you create, the more capital you can raise. And for the last 100 years, the entire world was capitalized on sovereign debt or fiat credit instruments. They underperform, therefore they're negatively polarized to capital. So there's a profound idea here, a paradigm shift. If people don't get it, right? They're a strategic incompetence, right? A lot of people don't want to get it. If you're just a cynical, curmudgeon-y, short seller, short-sighted trader, you don't want to understand. You just want to hate on it, so you're not going to. But once you embrace the idea that Bitcoin is digital capital, then the next issue is, well, what is treasury company? Well, treasury company is just a new kind of corporation, literally impossible in the world where public companies are capitalized on fiat credit. It doesn't make sense to sell equity to buy back sovereign debt because the equity cost of capital is above 14%. The sovereign debt has an after-tax yield of 3%, 2%, 1%. Doesn't make any sense. Doesn't make sense to issue corporate credit to buy back fiat or sovereign debt either, right? Makes no sense.